Next up, ladies and gentlemen, a very special little segment. This is going to be our first panel discussion for today. It is about fintech and financial inclusion. Is it a plausible matrimony? That's the question. And we are joined today by our moderator. First, let's all say hello to Samuel Rhee, Chairman and CIO of Endowus. How you doing, Samuel?
Great to be here. Thank you, Kell.
Thank you for spending time with us today, Samuel. We also want to introduce you guys to our panelists. We have Eric Anziani, COO of Crypto.com. Hello, Eric. Good afternoon.
Hey, Kell. Thanks for having me.
Thanks for your time today. I'm really excited to hear what you guys have to share. But we also have to introduce Kell J. Lim, head of Grab Financial Group Singapore. Kell J.
Hi, hey guys.
How are you doing? I like the branding that you've got going on with your shirt as well, you know? Very, very cool. Very cool. And we also have, ladies and gentlemen, another panelist, Sumaira Franicevic, Regional Head of Wealth Management and Advisory Asia, Citi.
Hey,
Sumaira.
Hey guys. Thank you for having me back. Really excited about this.
Our pleasure. You sound great. Ladies and gentlemen, here we go. We're going to go right now, dive deep into our first panel discussion. I'll be joining you guys real soon. Have a good one, guys. And in the meantime, if you guys want to keep in touch with us and ask questions, there is also Meeting Pulse. And this gives you the opportunity, of course, to get in touch with our colleagues here, ask them questions and send in your feedback as well. That's Meeting Pulse. You'll see the QR code real soon. Without further ado, ladies and gentlemen, Samuel, I'm going to hand it over to you.
Yep, sounds good. Thank you so much. And really great to have this amazing panel here together. I think we're going to start off with an engagement question. So the question that's going to go out on Meeting Pulse is, what is the first word that comes to your mind when you see the word fintech? So I think that's going to flash, or I think it's going to be shared on the Meeting Pulse. While that goes out, I think that we can start off with some introductions, delve a little bit deeper. I think each of the speakers can explain a little bit about their background and, you know, where they come from, what they do in their current job, especially as it relates to, you know, how the company and the work that you do, you know, really interacts with the financial technology and the evolution there. I think we have a diverse group. We have Sumaira from an incumbent financial institution, Citi, although, you know, Citi is at the forefront of digital transformation in the banking industry. We have Kell J, who's from Grab, big tech, I think Grab is part of that big tech group now, but also disrupting in the space of financial technology. And Kell J is a leader in that group. You have me kind of in the middle with Endowus, which is a digital wealth platform. And then you have out there at the cutting edge, Eric with crypto and DeFi. So maybe in that order, Sumaira, Kell J, and then maybe I can jump in and Eric wrap us up. We can take turns to introduce ourselves and, you know, our thoughts about financial technology, where we are, what your company is up to, and how you see the disruption in that space. Sumaira, ladies first.
Thank you very much. So like you pointed out, I work for Citi, and part of my role being the regional head of wealth advisory is really looking at how we digitize our wealth capabilities and wealth advisory capabilities. And that's across all segments. So from mass to mass affluent to our high net worth clients, you know, we can't all rely on the bricks and mortars anymore. It really, the future is how we can produce and provide best in class remote advisory capabilities to our clients. So that's a big part of my role. And that's, I'm super excited to be part of this panel because I can share, you know, what I'm seeing in terms of the landscape out there, what the clients are demanding, not just the millennials, but even our really wealthy clients are demanding digital innovation in the wealth space. And also there's some exciting partnerships between the old guard and some of the new players, right? I think there's some great synergies that can happen to look after our up and coming clients as well as existing clients.
Great, Kell J.
Hi. Hope you guys can hear me well. Thanks for having me again. So my name is Kell J and I'm from Grab. I've been at Grab for almost 8 years now. So when I first joined the company, one of the first things I did was to help launch the business in Singapore. Obviously back then it was a ride-hailing company. So I played the country head role in Singapore for about 5 years. It culminated in us acquiring the Uber business in Southeast Asia. And then with that, we also inherited the food deliveries business. So Uber had Uber Eats, and that's when we launched Grab Food in a big way. So I transitioned to lead Grab Food for a while regionally, but more recently, I'm now playing the head of the Grab Financial Group for Singapore, or GFG in short. And when it comes to GFG, one question I always often get is, how did we have the foresight, to get into financial services back then? And I wish I could say that we had planned this out from day one. That's really not the case. It was quite incidental, to be honest. We started off with us introducing GrabPay as a means of to make the payment experience for transport business more seamless. And that was 2015. A year later, we opened it up to payments outside of the Grab ecosystem. And in 2018 was when we announced our plans to go into financial services in a more broad way, and that's when we expanded into insurance, into wealth, into lending. And then in 2020, which is last year, which was a pretty big year for us. Firstly, COVID was tough on everyone, but it did help to accelerate the adoption of digital payments across the world. And there were a few things that also helped validate the stuff that we're doing. For example, we were able to raise a separate fundraising just for the GFG business. And of course, being awarded the full digital banking license in Singapore by MES. So yeah, really excited to be here today and also to learn from Sam, Eric, and Sumaira.
Wonderful. So for me, I think I'm a moderator, but I'm also a speaker. Apparently, I have to do both. I'm, as I introduced at the beginning, a co-founder of Endowus. Endowus is a company that was set up to help people invest better, so they can live easier today and live better tomorrow. We're a digital wealth platform. We're digital first, but also an independent financial advisor model. So we are fee only. So really moving ahead of the curve in terms of the regulatory landscape. And bringing institutional kind of investing to the average investor, the individual and the retail investor. So we are at the forefront of democratization of wealth. We are famous for being the first and only digital wealth advisor for CPF money. So we brought the whole of the CPF investing experience, which was a very archaic, offline, 2-week to begin, onboarding, and then getting pushed financial products to, invest, to a completely online experience where we brought everything online, in utilizing my info, 3 minutes to onboard and get going in CPF investing. So that's what we're famous for, but obviously we're a total wealth digital platform. And so we manage your cash savings, your CPF and SRS, and we are the only digital platform that can do that. And we're working towards, solving the bigger problems like retirement adequacy, which is the biggest generational challenge we face as a society. And we want to do our part in that. Personally, I've been in the financial industry for 27 years now and counting. Was with one company, Morgan Stanley, for about 17 of those years. My last role was in the asset management business. I was a CEO and CIO of Morgan Stanley Investment Management across Asia. And since I left in 2017, I've been building Endowus for the past 4 years as the chairman and the CIO of the company. So that's a brief introduction. Eric, you want to hand over to you?
Sure. So my name is Eric Anziani, and I'm the Chief Operating Officer at Crypto.com. Maybe a bit of background of Crypto.com, because we're not as known as the incumbent in the space. We were founded about 5 years ago now. We just celebrated a few months ago our 5th anniversary. And we are the world's fastest growing and regulated crypto platform. And we're serving more than 10 million users globally today and really addressing all their crypto needs, from buying crypto, selling it, exchanging it, spending it, and also growing. We can see us as the bridge between traditional finance and digital currency and crypto. And we're very famous for our crypto Visa card that really allows anyone to spend their digital asset everywhere Visa is accepted. So that's at 70 million merchants globally. And if we step back a bit on why we created Crypto.com, I think the foundation of the business is a strong belief, the belief that individuals should have better control over their money, data, and identity. And we felt blockchain technology was a powerful tool really to give back some of that control. And intimately to empower people to own their own growth. And that's why today we want to bring cryptocurrency to every wallet and bring that technology to the mainstream.
Wonderful. Maybe we can start off with a simple question. In one of the surveys that was sent out in preparation for the symposium, there was a question about disruption. And I think that more than 80–90% of the respondents said that there's still a lot of things to be disrupted in the space of financial technology. So, I think disruption is everywhere. I think for Sumaira, the incumbents, I think you need to disrupt yourselves, right? For Grab, you're looking at such a broad array of financial space. You're doing insurance, you're doing pay, you're doing like wealth now. And for us and Eric, obviously at the cutting edge of that disruption and disrupting the incumbents. So each of us play a slightly different role. So just wondering if each of us could also comment on where we are in this transition toward adoption of financial technology. What are we disrupting really? And what are the most important trends that you see in this space, in your respective space? Can we maybe go through the same? Sumaira, go first. Or should we go the other reverse if you want more time?
Let's be fair. Let's go the other way around.
Yeah, let's do that. Let's start with Kell. No, Eric, go ahead.
Sure. I mean, for us, we have the luxury of being nimbler and faster in execution because it's still relatively early stage, so we can innovate, at a much more rapid pace. And if you look at blockchain and crypto in general, it's really disrupting all the key components of financial services. It disrupts your payment capability, being able to send digital assets across the globe instantly with extremely low fees without relying on any counterparty. It's quite powerful and it's really disruptive. It's touching also trading and investment, being able to trade assets, 24 hours, 7 days on platforms, whether they're centralized or decentralized, and get access to this environment at also low fees. It's quite exceptional. And also the lending and the borrowing capability with very interesting interest rate and borrowing rate that you don't see in the traditional financial space. So it's very interesting, and it's also a part of a financial inclusion as well. Because today, if you want to participate in that new cryptocurrency economy, you just need a wallet. And you can start interacting with smart contracts, participate, exchange. It's very easy to do so. It also comes with responsibility and different type of risk that you need to understand. But this is very disruptive, and it touches the core of the financial service industry. I would add that beyond financial services, blockchain can also contribute to other economies, especially the creator economy. We're seeing it with NFT, and maybe we'll talk about it later. Being able to connect directly with your fan and collectors and transact your art and what you've created in a digital way is extremely powerful and disruptive as well.
Yeah, wonderful. Kell.
Yeah, to answer this question, maybe I'll just zoom into one of the verticals that we have, which is payments. And I think I'll acknowledge that when we talk about GrabPay, I think most people will associate it with a QR code. In reality, though, it's actually a little bit more than that. So GrabPay exists in three form factors. One is the GrabPay card in partnership that we have with MasterCard. So this enables our customers in Singapore to access or to pay across any of the merchants in Singapore that accepts MasterCard. So there's about 200,000 of them and a few million across the globe. Then there's the QR code. So the QR code, there's a couple of national programs that's happening today, which includes Pay Now and SGQR, which Grab is part of. And the whole idea is to enable anybody to just use the Grab app and scan any payment QR code across the island and make your payments. And then the third form factor is online. And this is a focus that, this is an area that we've been focusing on quite a bit in the last 12 months, particularly with the lockdowns and with COVID, as more people are shopping online. And we have now worked with over 1,000 businesses to accept GrabPay on their websites. So this is from an acceptance point of view. From a flexibility and options point of view, there's also multiple ways you can choose to pay with GrabPay. So you can choose to pay all up front, so pay everything in full, or you could pay at the end of next month, so a little bit like a credit card. And then you could also pay in installments, over 4 installments. So the whole idea here is that we want to make GrabPay the most widely accepted and the most flexible payment option, more so than cash, more so than even credit cards and other traditional modes of payments. And then to wrap that all up together, you basically earn rewards, right? Every time you use GrabPay to make payments. So that's really what we're trying to achieve with payments, and to disrupt the existing payment infrastructure.
Yeah, Sumaira.
So I'll have a little bit of a broader approach. There's this assumption that the incumbent banks aren't disrupting fast enough, or especially don't have the desire to disrupt. And I think that's quite a misassumption, because there is absolutely a huge desire to innovate, to be nimble, to adopt technologies and disrupt. The challenges that we have in the traditional financial service industries, of course, is capital adequacy requirements, licensing, and a really heavy compliance costs. But that in itself is driving a lot of innovation and disruption around how we manage that globally, especially for the big global banks. And of course, Sam, you would know from your background that some of the FinTech innovation that's coming in, whether it's compliance, whether it's cybersecurity, whether it's managing RegTech, is being really adopted quite strongly by the traditional banks. There's also active partnership, and I made allusion to that earlier on, is that the banks, whilst may on the face of it look clunky, we have the clients, we have the presence, we have years, hundreds of years of history and capabilities and infrastructures. FinTech companies need the clients. They've got the capabilities, they've got the technology, and the partnership that we're seeing, and you're seeing more and more announcements being made with big banks partner up with big FinTech firms, is where you will see the best of both worlds being presented to clients in terms of not just stable companies and which would safeguard their finances, but also really innovative technological solutions to their wealth requirements. So from a broad perspective, I see a symbiosis between the traditional and the FinTech companies to really change the landscape of financial industries as we know it.
Wonderful. And maybe if I can just add on to that, I think when we talk about disruption in finance and financial technology, the first thing I would say is that in the early stages of financial technology emergence, I think there was a space for early adoption financial technology companies to be really focused on disrupting incumbents. But I think that incumbents have woken up, and there's a lot that's happening in that space by the incumbents as well, and heavy investments as well in digitization and in people as well. So I think there's a strong comeback that is happening among the incumbents as well. So that's something to note. But more importantly,
there's also this thing that if you can't beat them, you got to join them, right?
Precisely.
So the partnership.
Yeah, so that's what I was going to get to, as Sumaira pointed out. I think that what's important is that very recently, much more, people have woken up to the fact that actually it's not an either or. We can partner, we can work together. That's why even in the wealth space, as robo-advisors, we're direct to consumer, but also there's a lot of B2B players who are enabling and supporting the incumbent financial institutions. The second thing I would say is that for a while, everybody wanted to be a bank. It doesn't matter where you started. You could have been a payments company, you could have been a lending company, you could be a wealth robo player. Everybody wants to be a bank, and everybody wanted a digital banking license, which Grab eventually got. But you guys have everything. A lot of guys don't have it, but still wanted it. And I think that was a bit of a problem. I think if you look at the history of finance, you see that processes and cycles of bundling and then unbundling businesses and then rebundling businesses. And I think it's very clear right now that, there are certain spaces where digital banks have a place to play, but a lot of these verticals, single vertical players are much more nimble and faster in executing, exactly to what Eric was saying about, what they're doing. And they can be faster to market and meet the needs of the consumer much faster. So I think there has to be, this divergence away from just everybody wanting to be everything, everybody wanting to issue their own credit card and want to be a bank. The third thing is that why do you want to be using financial technology in companies? It really boils down to, I think, two things. It's the superior user experience. And the second thing is cost. So that, if you boil everything down to it, I think UX and cost is at the heart of everything that FinTech is about. And so, keeping that in mind, I think we can see clearly who the winners and the losers are going to be over the long term. So some sharings there, but obviously COVID has changed a lot of things. Since the COVID pandemic, there's been a much more rapid adoption of digital formats, including financial technology. But also, I think it raised a lot of challenges for existing and new players. So maybe we can also share some of the major challenges that people face, or some of the barriers that you feel that still exist for FinTech to really flourish and take a bigger share of the financial market. For each of your segments, can you share some of the challenges and barriers that you face, and what are the things that you guys are doing to overcome that? And what do you think are the most important issues in this space? Maybe we'll start with Kell this time.
I think we live in a very on-demand world these days. Yeah.
Sorry, Kell. I forgot there was an engagement poll that's supposed to go out.
Oh, okay.
Guys, do you have a result of the first question that I don't know if you're sharing? Anybody from the team? Yes. Okay, the first word that comes to your mind. Sorry, Kell, we'll come back to you in a moment. Keep your thoughts. So what is the first word that comes to your mind when you see the word? Obviously, finance and technology, but blockchain is, I think, up there. Digital, cryptocurrency, money. Yeah. So a lot of different interesting questions, but sustainability is another one that pops out. Okay, a lot of interesting topics, but crypto, Bitcoin, and blockchain is quite prominent in this. So there is this association people have with financial technology as well. So that's interesting to note. But big data comes out quite a lot as well, innovation. Okay, we're going to go into another engagement poll. What do you think is a major challenge that Singapore will foresee in FinTech? Options that will be given will be cybersecurity issues, environmental concerns, data privacy concerns, digital tech barriers, the older generation. I think they're talking about me. Okay, so Kell, why don't you share some of these issues that you have?
Sure. Sorry, I was quite interesting to see the word grab in that word cloud just now. So that's good news.
Great.
Yeah. So maybe instead of challenges, I think I like to maybe address some of the opportunities. Right. As I was saying, I think we're living obviously progressively more digital, but also in a very on-demand world. And I was just sharing just now that I was thinking back, the last time I had to wait an entire week just to watch my favorite TV program, right? Today you could just binge watch the entire season of whatever you want to watch anytime you want. And to some extent, Grab has been doing a bit of that, right? Whether it was ride hailing, whether it was food delivery or any kinds of deliveries. And we're also starting to see a shift in that demand for really on-demand products that customers can access to, and this is contrasting to the more traditional products, whether it's applying for a loan, applying for insurance policy, or even making an investment. And Grab has also introduced some of these products to address these some of these demands. For example, Auto Invest is a product that we have, which is a savings product that allows our customers to start saving with as low as $1 with every Grab transaction. And with Pay Later, we're providing instant credit to our customers and to eligible customers. And of course, because we're doing that, and because we're doing it to quite a relatively large base, we are approaching this very, very carefully. So we're starting with a small amount, as low as $250, and it will gradually increase this amount based on the repayment behavior. And the other thing we don't do is that we don't charge late fees, we don't charge interest on interest, because we don't want our customers to get into a debt spiral. Another example of a sort of what I like to call micro financial products is insurance. So we have a quite an interesting product that we offer to our driver and delivery partners, whereby they're able to build up protection towards critical illness with as little as 10 cents. So they just have to put aside 10 cents for every ride that they take, or every order that they deliver, towards building up this protection. We had a driver partner recently who was able to build up a protection of over $200,000 from just doing his day-to-day work. So he had taken about 1,500 rides. Unfortunately, he was actually diagnosed with cancer. But the silver lining here is that we were able to pay out in full from this coverage. So we'll continue to evaluate the changing behaviors of our customers and introduce. We're not afraid to introduce new products, stuff that has never been done before in the market to meet those needs.
Right. Maybe we move to Eric.
Sure. I would say maybe 2 or 3 points on my side. The first one, especially for an industry that is relatively cutting edge, so now we have more than 10 years of Bitcoin being created, having more clarity and standards regarding regulation in general will be extremely helpful for the industry and for participants to thrive and for customers to be reassured. I think we're quite fortunate here in Singapore because MAS has set up a very clear framework for those DPT, digital payment token or cryptocurrency, and that has been done in consultation with all the industry participants. But that's not the case across the globe. And for Crypto.com, we're a global company. We operate in 90 markets. So it makes it extremely complex to navigate. We have to set our standard extremely high so we can adapt to all this situation, and we have to be very flexible. And that's not always ideal for customers as well. So I think that's my first point on clarity on regulation. The second one is really about education, and I think that's why we're here today. We're doing our part in contributing to that, and enabling people to discover, understand these new technologies better, understand the risk associated with it and the potential benefits, and also have the ability to experiment, have sandboxes, so they can slowly learn and try and get more comfortable with it. I think that's quite critical. Finally, I think Sam, you mentioned that this UI UX part is extremely important. Having a super smooth user experience, especially when dealing with quite complex technology like decentralized finance, how to abstract that technology and generate an experience that is safe for customers and understandable. So I think that's also quite key, and there's challenges and things, opportunities in that space for sure.
Great, thanks, Eric. And maybe in the interest of time, we can switch gears for Sumaira and myself. I don't know if Sumaira, you had an answer ready. You can answer and then move on to the next question, which is, navigating the investment space. Should young people still be investing, and how should they be investing? And you're in the wealth space, and so is Endowus. Maybe we can take that question.
How specific do you want me to be? You talk about general?
Just generally with, the audience today is a very young population. Just how they should be navigating this digital wealth space, and what they should be doing, or what are the things they should be looking out for, and whether they should be investing, right?
Yeah. Like, I mean, I remember this audience from last year, right? They're not newbies. The questions I got asked last year were very specific. So I'm actually going to be a little bit more specific around, what we're seeing in the market. And I'll say the same thing I said last year to them. And I know it's starting off with the boring stuff, which is, look, the fundamentals still remain the same for investments and wealth. It is the basics 101 of diversification and making sure you don't put all your eggs in one basket, making sure you start early, right? You guys have time on your side, make sure you start early. And there's so many options now where you can start from, as Kell was saying, from as low as $1, right? So the phenomenal beauty of the fintech disruption we're seeing is the ability for everybody to partake in investing and in wealth. If you're looking at what specifically to invest in the next, we've had quite a lot of market volatility, with the Delta variant coming through, with inflationary risks that are making investors nervous. We believe those are temporary from an inflation perspective. That's COVID driven. And there's quite a few opportunities within there as well. I think next year we're expecting a traditional sort of mid-cycle conditions to some point in 2022. So we're talking to our clients about more high quality investments like US large caps, given the high profitability, stable earnings. Within the US large caps, we're looking at healthcare, and healthcare is also one of our unstoppable trends. These are long-term trends. We're an aging population. Sam, you and me both in that criteria. You will certainly see a lot of growth in that sector, and it's trading at a deep discount at the moment with some really compelling growth opportunities. Specifically to Asian markets, we've seen a lot of just uncertainty with China flexing its regulatory muscle, and we believe that the recent underperformance actually gives you an opportunity to buy into China. China is a growth powerhouse, an economic powerhouse. Asia is another one unstoppable trend. So that's another area that we're looking at a tactical shift. So these are some of the specific, if I was to give advice to, I know, a very well-versed audience, these are some of the things that we're looking at from an investment perspective. But at the end of the day, stay invested and make sure you diversify.
Yeah, wonderful advice. And yes, you're right. This is a very savvy audience, and that's why they're here. They're taking initiative and learning and improving themselves, and that's fantastic to see. But if you look at the fintech universe and especially the wealth and investment space, I think largely there's three big buckets. One is a very passive approach to investing where you outsource a lot of the decision making, and that's where Endowus kind of comes in, where you have advised portfolios, core portfolios that you should be investing for the long term, as Sumaira suggested. You really need to invest. Even crypto, if you held long term, you would have done much better than if you traded. Maybe some great traders exist, but normally the long term actually wins out. So there is that passive advisory kind of services that are being provided digitally. And those are wonderful, one-click solutions, really seamless experiences, really low cost. But if you want high touch, high quality service, then you still need to go to the banks and the traditional channel to receive that. And there's a second segment, which is the active kind of, player, identified by the Robinhood kind of Reddit community, where you are taking decisions into your own hand. And even that space, Endowus does play a certain part to it, because we do have curated DIY and personalized investment options at really low cost, the lowest cost in the industry. So that's the second bucket, which is the active. And then the third bucket is part of that, but I would separate, which is Eric's space, which is crypto, DeFi, other alternative investment opportunities. And that would include lending platforms and, this shade is getting really bothersome. So yeah, there's different buckets. And I think that what's important as young adults is really to look at the full opportunity. Secondly, look at yourself, where you are in your investment journey. What is your risk appetite? What is most suitable for you? And what's going to give you the highest chance of success, right? So you have to find the right platform, the right services, the right solutions that make sense for you. And what are the goals that you're trying to achieve? I think it's great to say, I'm going to make as much money as I can, But I think having well-defined goals like, I want to save up for my next car, or for my wedding, or for my children's college education fund, or my retirement, which is the greatest and biggest goal for anybody. Imagine a world where 50% of the population retire, get into old age, but don't have enough to live on. That is a tragedy, that society just cannot handle. We all need to do our part in this and, really work towards retirement adequacy. And I think that's what, Sumaira and Endowus and all of us are trying to do, which is to solve this problem of us, saving and investing well so that we achieve good outcomes to secure the financial future for ourselves and our loved ones. So I think that's really, really important for us to do. Sorry, I was a bit preachy in that one, but so navigating this space, maybe we can have the results of the other question that we had. What are some of the major challenges Singapore will foresee in FinTech? Cybersecurity is number one by a very small whisker. The second one is digital tech barrier among the older generation. I think, to be honest, COVID really changed that. We have investors who are using our platform and they're 80 and 90 years old, which is phenomenal. So it really is, I think, changing. But yes, I think people still see that as a problem. Data privacy again, and environmental concerns. Any thoughts around this? Anybody want to volunteer any feedback or thoughts about these issues that have been raised here?
Yeah, maybe some thoughts on the cybersecurity items. I think it concerns all of us in the financial industry. I think it's one of the key risks we have today. And I think it's very important as organization that, of course, we have security and privacy by design and by default in everything that we do. But more importantly, that we have what we call a growth mindset. I mean, protecting our customer data and our infrastructure. It's not a job that is done and it stops. It's a continuous effort. And it's very critical that we invest in strengthening security every week and we hire the right people, we put the right processes and continue to improve. I think when you look at companies out there, it's very important also to look at the certifications, all the licenses that they've acquired that showcase that they've done that homework and they have invested and they continue to invest in that space to protect their customers' livelihood and privacy.
Great. And we're going to go to Q&A before we wrap up. One of the questions that came up, and maybe I can direct this one to Kell first, is number 3, question 3, which is FinTech has helped many people and in recent buy now, pay later trend, BNPL. Would that idea instead risk buyers into purchasing and placing themselves in greater credit risk? And I guess it goes to the question about whether financial technology is truly democratizing, or is it actually forcing us to do things that we would not have done and forcing us to take on more debt, take on more risk, like Robinhood? Is it really a good thing? And so, Grab is, not necessarily buy now, pay later, but you guys are involved in many areas of lending, etc. So maybe Kell can start off, and anybody else wants to chime in, please do so.
Yeah, it's a good question, and it's something that we spend a lot of time discussing internally. So obviously we have one objective to grow that part of the business, but at the same time we want to do it in a very responsible way. I mentioned earlier about how we're sort of differentiating a little bit from the traditional products in the market, like credit cards and so on, where we don't actually charge a late fee or interest on outstanding amounts, and that's purely because we don't want the customers to go into debt. But we also use models, right, to essentially assess the creditworthiness of our customers. And because we do have historical transactions from them, we're able to quite accurately ascertain whether they are able to pay or not. And in any case, for the segment of customers who we're not too sure, we always take the conservative route and just provide a very, very small credit amount, and then we grow from there. we genuinely believe that a product like Buy Now Pay Later will help our customers to manage their finances better. But at the same time, we also want to provide options. So if a customer is able to pay in full, yeah, go by all means do that. I mean, in fact, we encourage that. So we provide the options for them.
Anybody else, Sumaira, want to chime in?
Yeah, I'll chime in on a broader aspect in terms of democratization of wealth and how the FinTech industry has really made a level playing field, right? So Professor Ghosh initially started off in his opening address saying knowledge is power, right? In my days, in your days, there's for us to understand and become savvy in investing and managing our wealth and being financially literate and responsible, we wouldn't be. I mean, I just happened to be in the banking industry, so that's why I learned it. But if I wasn't, I would have to physically go out and find this information and educate myself. But now, we're building out journeys, digital journeys, where we're educating the clients, we're giving them the knowledge, the understanding they need to know about their risk profile. What is all these different terminologies? There's so much terminology that we use that if you weren't from banking, you wouldn't understand it. But now with the whole digital platforms that we're building out, it's all about creating a really holistic customer experience and client experience that drives not just the product, but understanding what your needs are, getting a really robust education of what all these financial terms and wealth terms mean. So you're clearly clear on your financial confidence and what you need to do to take control of your financial health. And I think that's really important. And once you have that, then you are able to understand buy now, pay later, what the impact, the risks and pros and cons of that is. So, I think, and it's our responsibility as well as we build these platforms out, whether it's the big banks or the FinTech or a combination of the two, is that we're not just product plugging, right? We are building that ecosystem of information that we're empowering our clients to make those decisions, to become more financially literate and confident to be able to make those decisions and build their financial future. So I think it's a great thing.
Absolutely. Yeah, I think financial literacy and financial education is front and center to everything that's going on. Maybe Eric, question two, given that DeFi is one of the fastest rising trends of FinTech, a lot of people are turning towards it in the current yield-starved environment. Will this really achieve democratization of the finance industry, or just another way for first movers and the rich to increase the income gap? So again, a social element, which is a continued theme in a lot of the questions, but also a very heavily technical question. So again, to Sumaira's point, very savvy crowd. But Eric, maybe you can just maybe, first of all, talk about DeFi a little bit and then address the specific question.
Sure, of course, yeah. And DeFi is a shortcut for decentralized finance. So it means access to financial services in a decentralized way. That means not going through a central party like a bank, and by using smart contract, which is basically code that everyone can see, it's open source, can verify. And it's connected with cryptocurrency, which is kind of the base asset that you use to participate in those financial services. The most popular one are exchanges, or called AMM in the DeFi world. And you also have lending and borrowing protocol. I think those are the major ones that people use. I think there's a strong part of financial inclusion because anyone can go and participate and try these different services. You don't need to have a long history of payments for someone to assess your credit worthiness. You don't need to go through all the different checks that you would have for traditional products. So that's part of financial inclusion, I would say. But at the same time, it's more responsibility on your side because you are in charge. You own your growth, you own your assets. You are, in a sense, your own bank. And if something goes wrong, there's no one to call, and you have to take responsibility. That's why I always advise customers in their journey to start with things that are a little bit more what we call custodial. So your assets are managed by a company. They help you discover the space. And as you get more experience, you move to things where you have full control over your asset and you can participate directly into this DeFi protocol. I think today the opportunities and the yield that you see are very high compared to traditional finance. primarily because the asset class is nascent and the regulatory framework are not always there. So with time, this will progressively slow down. But because it's a open source and community, everything can be seen, can be copied as well. There's so much innovation happening. Every day there's something new because people can add on into something that people have created very quickly. So the pace of innovation is incredible and anyone can participate. So I find that space very fascinating and there's a lot of opportunities, but you have to do your homework. You have to start small. You have to experiment, start from the custodial, the centralized wallet, like the Crypto.com app, and then at some point progressively move to using MetaMask or our own DeFi wallet, and then start experimenting directly with DeFi protocols. And there are opportunities for everybody.
Wonderful. Maybe we can wrap up with maybe everybody giving one piece of advice that you wished your younger self knew. And it doesn't have to be just on financial literacy. It could be anything you want, what you've learned from your journey, building up the company that you each respectively in. And this one, free for all, whoever wants to take it first. Anybody ready to take it? One piece of advice. You had the questions, guys, so you had time to prepare. I'm gonna let in on everybody. Eric?
Sure. If no one, I can take it.
Go for it.
Sure. And it ties a bit to what I just said. I think the advice I would give is really to make a commitment and experiment. It's really about trying and learning. It's fascinating how much you can understand and discover by experimenting. So you have to make a commitment. There is this little bridge to cross, but by trying and experimenting, you learn so much. And you can put very little capital, as we discussed, from $1, you can start experimenting and you can ask questions and you learn so much from that. So, be brave, commit, and experiment.
Wonderful. Next.
I can go ahead. Yeah. Well, I probably won't give an advice for myself. I'm not that wise. But what I would like to do though is to share one of the best advice that I received with regards to finances, and this came from Morgan Housel, who's the author of The Psychology of Money, right? And so we invited him to speak to a few of us, and he shared many good insights, many good tips. One of the things that stood out for me was a story he told. Two guys who went to a party that's hosted by a really rich person, and at the party, one of the guys said, this guy makes so much money that he makes more money than in a month than you make in a whole year. And so the other guy replied, said, yeah, that could be true, but there's one thing that I have that he doesn't have. What is it? He said, enough. And this concept of enough, it is so simple, but yet so powerful. And it's really the reason why a lot of rich people or seemingly rich people continue to get into financial problems, because they're always looking for more, and they're never enough. Think of a time where you had to work really hard, slog it out towards something, a goal, right? That doesn't even have to be financial, but something. And then you get to that point and you realize that, hey, the goalpost has shifted. Yeah. How did that make you feel, right? Frustration, anger, disappointment. And by constantly wanting more and not having enough, you're essentially moving the goalpost on yourself. So what Morgan said was, one of the most useful, most important financial skill to have is to understand what is enough for yourself, and then to stick with it. Don't move that goalpost on yourself. I thought to me that's really, really useful.
Thank you so much, Kell J. Sumaira, you're up.
That was pretty impressive, Kell J. Even I'm writing that down, because that's I think advice for all of us.
It's not for me.
It's phenomenal, right? So I think for me personally, two things. First is, if you haven't already started, to start your wealth journey, your investment journey. My kids I've got two teenagers. I've already started them up with a share account and teaching them. You just start. The second piece of advice would be just from a life perspective, something that it's really helped me is always try something that scares the shit out of you, right? In my career, I've gone and done roles that has absolutely taken me from being the master of what I knew to complete novice. And I've been very lucky to get that opportunity from people who believed in me, even though I thought, I really don't think I can do it. And that learning that you get, yes, you're thrown at the deep end, and the first 6 weeks you're in a corner huddled up going, what the hell have I done? But the learnings that you get and the resilience that you build up and constantly challenging yourself by putting yourself outside your comfort zone will hold you up, and really strengthen you to be able to deal with change. So 2 pieces of advice. If you haven't already started investing, I'm sure actually this whole entire group I know probably already has, so that's a redundant piece of advice. But the second one is really important. Always challenge yourself, and always, if you're comfortable in your comfort zone, then you're not learning. Just really push yourself.
Okay, wonderful. My only sharing is that it's never too late, first of all. Never too late to learn, never too late to try new things, never too late to start a company. I started, with Greg and my colleagues and partners, 5 of us, 6 of us, when I was mid-40s. So it's never too late. Second thing is you're different. Not be different, but you're already different. It doesn't matter what others are doing, what others have. I think you're different. And so, be comfortable with yourself. Enjoy where you are at. And enjoy that difference that you have. It's unique, it's a gift. So with that, we're well over time. I think the organizers are very stressed out right now, and my dear friend Dave Fernandez, who's moderating the next one, is stressed out too. So with that, we'll wrap up. Thank you so much for joining us. Really thank Sumaira, Kell, Eric, and everybody for joining us today.